Welcome to the Property Elite podcast. I'll be your host, Jen Lehman, chartered surveyor and co-founder of Property Elite. Stay tuned each week for more on industry hot topics, market updates and new RICS guidance. In this week's podcast, I take a look at the RICS Insight Paper IFRS 16, Principles for UK Real Estate Professionals, Accounting for Leases on the Balance Sheet. It's essential listening for APC candidates relating to the mandatory and sometimes technical competency, accounting principles and procedures. Head to our website blog to find a link to download a full copy of the Insight Paper. IFRS 16 brings almost all leases onto the balance sheet, where they are treated as finance leases. This makes it easier to assess an entity's lease commitments and to compare different entities using their financial statements. Under IFRS 16, a lease is defined as a contract that conveys the right to control the use of an identified asset for a period of time in exchange for consideration. Although accountants and finance professionals primarily deal with IFRS 16, property professionals may be asked for professional input on real estate-specific matters. So, understanding the high-level principles and practical application is essential. What key principles of IFRS do you therefore need to be aware of? First up is the right of use asset. This is introduced by IFRS 16. It's the right of the lessee to use the asset for a term certain and to incur a liability to pay rent or other lease payments. The term certain or non-cancelable period will include any option to extend, where this is reasonably likely to be exercised, or any option to break, where this is reasonably likely not to be exercised. As such, an entity cannot simply adopt the shortest term certain to limit the impact of IFRS 16 on their balance sheet. This should therefore be a reasoned decision based on the most likely operational decision, and it will require the input of an experienced surveyor. Models, second up. There are 3 models that can be adopted when transitioning to IFRS 16 or entering into a new lease. The default position is the cost model, in particular where there is a market rent and there is a short term, which limits material increases in value or regular rent reviews to prevent the property becoming over-rented. The other 2 models which may be adopted are the fair value model for investment property or the revaluation model for specific asset types. There's 2 categories here: non-specialised assets where there are relevant events such as a change in the lease term or change in future lease payments, or specialised property, such as PFI hospital contracts using the depreciated replacement cost method of valuation. Specific detail on the different models can be found in sections 2.2 and 2.4 and parts 5 and 6 of the Insight Paper. Next up is discount rates. IFRS requires that lease payments are discounted to present value at one of 2 discount rates. Either the interest rate implicit in the lease, so the lessor's internal rate of return, or the lessee's incremental borrowing rate, if the above cannot be readily determined. Section 4 of the Insight Paper provides full guidance on establishing the appropriate discount rate based on the specific circumstances. The latter of the 2 options we just looked at is likely to require the input of a business or debt valuation specialist. Finally, the Insight Paper also deals with sale and leaseback transactions in section 2.3 and how these should be accounted for. Surveyors may be involved in providing advice on fair value at the time of the transaction. IFRS 16 became a requirement for the public sector to adopt from the 1st of April 2022. Additional guidance can be found in the HM Treasury Financial Reporting Manual and CIPFA SIPFA Code of Practice for Local Authority Accounting, amongst others. The basic definition of a lease under IFRS 16 is extended for central government to include intra-UK government agreements where non-performance may not be enforceable by law. There are also a number of other areas where IFRS 16 is adapted for use by the public sector, outlined in Part 3 of the Insight Paper. One key example is the exclusion of leases under 12 months from the application of IFRS 16. Thanks for listening to the Property Elite podcast this week. Head to our website to check out our full blog, free and paid support resources and services, free consultation for every single RICS APC and ASOC RICS candidate, and also ask us any questions you have via the website chat blog. See you next week.